All right, folks, here we are on Trading Up. We've got Gedson K in the house now. He's about to walk you through how he basically trades the markets. It's going to be like a little mini course here, talking about structure, moving structure into a range and liquidity as well. So there's a whole bunch of stuff here. This is his unique approach on what he talked about in the podcast we did, where he brought together supply and demand trading and smart money concept trading. So you're going to get a little bit of an insight into this today. So Gedson, let's have a look at your price chart and head it over to you. Folks, if you missed out on joining the Trading Nut Funded Cup, don't worry. With over 3,000 traders registered, my sponsors City Traders Imperium have decided to run another, but this time they've promised the prizes will be even bigger and better. Folks, if you want to register for this and show your skills as a trader, click on the link above or the link below the video or in the podcast description, then sign up for free before mid-July 2022 and get 10% off any City Traders Imperium product just for entering the competition. Good luck, folks, and we'll see you in the cup.
Yeah, most special, this is my chart, like the way I look my chart. And I'm going to start from daily time frame. Oh, sorry. I'm going to start from daily time frame. Oh, why I keep on making a mistake? I just want to show how I look in the market, and I'm going to try to explain about this place and what I look most of. Why is not deleting? Okay, so let me go to US 30. Okay, so what I focus more on the market is to try and understand about how this high and low that market is creating. Then if we check, let's say example here, we're gonna see when market was going to the upside, this was the most significant high that we could focus on after market come and respect this demand area, the one we have here. Because in terms of demand, remember, we need to see market create, let's say, a drop, market create a base, then market rally. So this area here become our significant level where we are going to monitor when market is coming back. And this is what end up happening here, because here we have this drop, then market create a base and market rally. If you can check here, probably you're gonna see there was this low point here. That is the one we call an inducement as an internal liquidity, because this area was trying to come and fill this zone, but could not fill the zone. Then market take over. So after market take over, the only thing that we need to understand is that when market creates a zone, a significant area, then we want to see how market is gonna pull back. Then how do we know this range is already stopped? Let's say from this low to this high. Then we want to try to understand, like, okay, this one is already stopped. Is when market is going to the upside, something like that. I want to see a QM on both sides. The one I call market has to run liquidity and break structure. So on each range, I have to see something like this. Market has to do something like this. So market has to run this low and break this high. And to the top also, I want to see market done the same thing. So break the high, break this high, like the one is a buy stop, then we need to come and break structure. So anything that is going to happen in between here, that is the one that is going to be liquidity. So if I catch an entry, let's say market goes up and I get an entry, my target is gonna be, if I take an entry from here, my target is gonna be from where there is a point of interest, like a crucial point. Then I'm gonna take my market until this area. That is the way I normally focus on my trading. So I'm just gonna go through it so that you can see what.
So you mentioned QM there. Do you want to explain what QM is to the guys that don't know?
So a QM, just this is what I want to try to explain here on top. Let me go to H4. So what I want to see is that if we check when market was going to the upside, market created this high. I hope you can see that market created that high. So when market created this high, the only thing that I'm going to monitor right now is going to be this area. What is going to happen inside this area? Because this is the low point where, because market is already break structure. So the only thing that we're going to wait for is going to be if markets come back like this and market has to take over. Then if markets fail to do that, then markets break this low. The only thing that I'm gonna do, already I understand market is already create a QM. A QM is when market create a high, run that high, You see this one? Then if markets come and break this low, why this low? Because this is the low that caused the manipulation. The manipulation of running this high, then create a new higher high. So if this new higher high fail to come and hold here and break this low, so already I get a shift of markets. I understand that market is already show me the direction that is wanna do what? It wanna go to the downside. The only thing that I'm gonna wait is gonna be market to come and create a liquidity. So create a high, and this high, market is gonna do what? Is gonna run that high and come to the downside again. So every time when I wanna take a trade, I wanna see market create a high like this, then we run that high, then we take our trade. This is what we're gonna see here. Markets come, create all this high, but check this one, come and run that high, fill this area, then we take over. So when we are taking over from here, we know already where is the measure point that we need to focus. We have this one. We have this low here. This low here is going to be our target that we need to target. And at the same time, we have the original movement, like a point where we need to monitor. Then if we can check from here, this low, that is the one that created this high. Why is this one more important? Because if you check like the way I explained, I need to see QM on both sides. You're gonna see here, we had this low and we had the break of that high. So markets come inside and trade here and fill this area. The one I explained, QM, you're gonna see this is low, market creates, goes to the downside, give a stop hunt, then we run to the top side, we break this area, is like the one I explained like this. So this is what I see. When we break this one, we're gonna wait for market to pull back and market take over. That is the one that we need to understand for us to take a trade. And if you check here, this is what happened here. Let me just use this one so that you don't keep on deleting. You're gonna see this swing high. This swing high was the one that produced this lower low. So then this one, it become our stop hunt. Why? Because here there was a bunch of liquidity. Why? Because market gets close to our demand area, but there is people that they normally rush in the market to say, no, they are gonna miss. They rush to take the trade here. Then the market goes up, come and take them out. So after market take them out, the only thing that you are going to monitor is where is the last swing that produced the lower low? Then we understand this high was the one that produced this lower low. If markets break it, the only thing that is gonna make valid this zone is gonna be liquidity. I know there is a lot of people that wait for market to come to the downside, but where is the liquidity for this area? That is the most important thing that you need to focus on. And if you check this area, was the area that hold price. So this area hold price, why it's hold price? It's because we had all this liquidity. As we can check, we are this low, this is a liquidity, and plus we have this zone here. It's going to act as a liquidity because here we have a rally, bears rally. In supply and demand, we understand when we have something like this, we know already a significant area where market is going to hold. But you need to pay attention. Where is the most significant zone where the original movement started? The original movement started from here. This is why you could see when markets come back, market just get here and hold, then you take over. But as long as you have this such of setup, you know already you have your QM to the downside and market create another QM to the top side. So when I have something like this, already I know my range is already doing what? My range is already complete. So this is the low and this is my high. Now, if I want to take my trades, let's say market is coming the downside, where am I going to take my trade? I need to focus now on where is the 50% of all this movement? Because remember, this is the daily range. So I'm going to try to find out where is the 50% of this. And when markets come to this area, I'm not going to take a trade, maybe let's say because I have this zone. Let me mark this zone like this. I have this zone to be as my demand area. I'm not going to take a trade because market just get here straight and I want to take my trade. The only thing I want to see here is for market to come and do something like this. Stop hunt, break of structure, create an inducement, run that inducement, then we take over. This is what I want to see happen inside this zone. If they are not happening, I'm not taking my trade. So let me go back to daily. Then when we come to daily time frame, you are going to understand that after market break this significant low, because this low was the one that produced this high. Then markets come and break it. So if market break this one thing that I understand is that market is already showing me the willingness on daily time frame to say that I'm about to drop. I'm going to give a huge movement. So now the only thing that I'm going to do is going to be this area is where I have my break of structure. So I have to find where is my range. If I find my range, then I need to find out inside the range, where is the place where there is order that market did not mitigate. Then what I'm going to do, I'm just going to take my Fibonacci from the top to the downside, because this one, I work with it because it's like premium and discount. So I know down is a discount and on the top is where I have premium. Then if you check properly, what I was explaining to you on the beginning, every time when the market want to sell or market want to buy, market always do something like this. Market is always create this high for them to do what? To come and trap people. Can you see the way they did it? They created this high, they drop, then they make another movement so that they can do what? They can come on this area. If you check here, we have what we call, we have this IPA. We call it IPA, imbalance price close action. So if you can check here, we have this IPA, the one that is there. Markets come here because they want to make this zone valid. They create a high that is like an inducement for them to do what? To come and run it after. Then they come, they run that one, then market drop again. But the only thing that when market is dropping, only thing that you need to understand is that this area here, it's a zone that remains. And how do we make this zone become valid? We want to see where market is going to do it. Market is going to drop and break the previous lower low. Remember, this lower low is the one that produced this high. If markets break it, the only thing that we're going to do again is for us to create another range. So now we are trading in which range? This is going to be our strong high. Why is a strong high? Because it break the high, it run liquidity and break structure. I hope you can see that. We break the high, we took liquidity on the top side, and we break this low. Then what is this? This is what we call an internal liquidity. In supply and demand, we call it FTR. This one was trying to come back to the supplier level, but failed to go to supplier level. Then markets continue dropping. So in market dropping, the only thing that we understand is that, okay, market is already create a strong high. And what do you wait next? We are waiting for a strong low. And where is your strong low? As I explained, a strong low must break structure, must give a stop hunt and break structure. So this one here become our strong low. It become a weak low. Then when it become a weak low, the only thing that we're gonna wait now is to take again our Fibonacci. We understand where is the discount. Anything above the 50% is gonna be our area where we are going to do it. We are going to focus for us to take the trade. So now we understand that, okay, from this range, the way market was coming the downside, market is already leave liquidity, so many liquidity. We know already we have an internal liquidity, a high that was being created inside this range. So we need to run that high. When we run that high, when markets run that high, like the way I explained to you, market always created this high in purpose for them to do it, for them to come and trap more people. They created that high and check what happened. After they create this high, they run it, they sell. So these things happen like over and over in the market. Even if we check, let's say example, we take this side. We know already where market is coming the downside. Here we have inefficiency price. As we can check here, we have inefficiency price here. But if we go to H1, you're gonna see what was happening there, because I remember I trade that movement. Let me delete this one. I remember I trade this movement. It's the same logic, like the way we are doing, like on any time frame. You're gonna see what was happening here. And if you check here, remember the only thing that you have been looking is that when market is going to the upside after running this high, market created this high. We run first the internal liquidity, then we need an inducement for us to take a trade. But check what happened here. Market created this high. When markets create this high, we know already this low. When it went to the upside, it failed to run the previous high, but markets keep on making the lower low. So if you can check, you can take just your Fibonacci from this swing high to the swing low. you know already this is the current range where I'm trading. Anything above this red line is gonna be your decision point. You're not gonna make a decision based only on H1. You can go maybe to low time frame or higher time frame and try to find what the decision point. But for that day when I was trading this one, this area was my significant area. Why I use this one? Because here I apply what I learned in supply and demand. I know this area is a strong low. That area, you see this area is a strong low. Because if we go to line charts, you're gonna see that area was a strong low. You see, this area is a strong low. Markets create a strong low, then run to the upside. Then markets come and break it. So after markets done that, I know already this is a strong low, so market is gonna come and react from it. This is why I end up taking my trade. As I explained, I combine supply and demand plus SMC. And where is the liquidity for them to make my zone become valid? You can check this eye, the way they create this eye. You can see there is people that they are trading this trend line stuff because they'll sell here, they'll sell here, and they'll wait for the third touch. They believe after the third touch, this is when they have to take their trades. But when you trade, let's say SMC, you understand this third touch, in most of case scenario, they will fake out, then they will drop again. So this is what I understand. Then if you check, market is already created a new range. What is our range? Like I can repeat again, our range, market has to give us something like this. So market has to break QM on both sides. If I have QM like this and I have a QM like here, so this eye become my eye and this one become my weak low. So what I'm gonna wait is for market to run all these things they create inside here and create an inducement, run that inducement, then we take it, we target this low. This is what I'm gonna look. And this is what I want to see in the market for me to be able to do it, to take my trade. If you check here, market did the same thing. Markets run that eye. Markets run that eye. And if you come to the downside, here we break the low because this low is the one produced that eye. And if you get here again, market did the same thing. Market creates this low, we run the low, and we break the eye. What does it make? It make my range be complete. Now I need to see where is the level that market is gonna do it. Market is going to focus where I'm gonna take my sell position. So after I apply my FIBO, I know my 50% is gonna be above, then I'm gonna focus here to be my zone. Where I'm gonna do it, I'm gonna come and take my trade. Then where is the adjustment stuff? For me to be able to take that, you're gonna see market is already create another eye. This eye, the one that they made here. So I know already market has to run that eye, then I'm gonna take my trade. You're gonna see these things like happen over and over. Remember, this is our last strong eye. After markets come and create this, you see, we run liquidity and we break structure. Why did the markets come back and hold on this zone? Why did the markets come and back and hold on this zone? Yes, because we had liquidity taken, break off this low, so it make that eye become a strong low. Even if market is already get to a place where it has to buy now going to the upside because of that imbalance, but there is a strong eye somewhere that market has to go and mitigate. How is that possible? Because we had everything that it takes for market to go and run. Check all this bunch of liquidity, the one was happening. This is why you see market get there, react, and come to fill another supply, a demand area, then they take over. After imagine they get now to a strong level of supplier. Check the drop. Check that drop and the way markets went to the downside. The only thing that you need to pay attention, let's say when you are trading the range stuff, is by understanding on like every range got its own logic on each time frame. You're gonna get, let's say if this one was H1, if you go to M15, you're gonna see what was happening on M15. If you go to M30, you'll see what is happening on M50. And this is what is going to help you on how to take your trade without even asking yourself questions. So this is the way I approach the market, and this is how I'm able to make my daily target and my income from trading.
Hey folks, you ever wonder what broker I use? Well, I use HankoTrade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining HankoTrade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. That's awesome. That is so cool. I've actually learned this stuff before in many, in a couple of ways. one way, like sort of quite in depth, and then so like for anyone watching, failure to return was the FTR that Gedson mentioned, and the other one, QM, was Quasimodo for anyone.
Yes.
Yeah. So look, before we wrap up, what's the best way for the guys to get hold of you?
Like the way I explained, they can get in touch with me via my Instagram and my YouTube channel, Gedson K, for anything that they want to learn about this stuff, because there also I did explain them in details from there.
Cool. Well, look, guys, we'll put a link to Gedson's podcast episode under the video here. So please go and check that out. It was an absolutely epic podcast. Some great mindset hacks in there. We talk about that in detail as well. And look, if for your interest, just out of interest, so interest sake, somebody actually asked me to build almost that entire strategy into a trading robot years ago, and funnily enough, it was a Malaysian guy, and I don't think he could speak very good English, but so I've seen this kind of approach before. I know yours is slightly different, and I've not actually seen it taught this way, so thank you very much. If any of you guys are looking to automate stuff, this one here was actually not automatable. Some elements yes, but some no, or the majority no, but you can. I do teach you how to build like trading robots, fully like automated or semi-automated, that can do some of that stuff. All right, guys, look, thank you for watching the show. Please remember, hit subscribe, hit like, and click on that notifications bell and click all, and we'll see you in the next video.